Okay. Okay. Again, officially welcome, and sorry, I'm having work done at home. Please ignore if you can hear the noise. I'll pile on to our speakers. Can you please introduce yourselves? Tell us what you do, your career journey, and importantly, why you think it's important for women to take control of their financial well-being. Should we start with Alexia on this one?
Very unlucky the timing of the work being done. This really brings me back to pandemic days. Hello, everyone. I'm super excited for today. I am Alexia, and I'm the founder of a company called Your Juno, which is a financial education and community app for women and non-binary people. So you can kind of think of us as like a Duolingo for money. And I was telling Vicky, you're really lucky because in March, everyone can get the app for free because we are doing an offer for International Women's Day. So yeah, you can learn about everything from budgeting to saving to salary negotiation, investing in like a bite-sized and gamified format. And before doing Juno, I was at PwC for a year and a half and McKinsey very briefly before. So kind of know the transition from working in a more corporate setting into the fintech world.
Emma, do you want to go?
Thank you.
Should I go? Cool. God, your building work is really loud for you. Hi, everyone. My name is Minnie. Real name is actually Olivia, not Minnie, but nobody knows that. Bit of background on me. So I actually started off, I was sort of obsessed with going into investment banking. Didn't think of any other career path, was very narrow-minded, and did various internships, sort of like basically at every investment bank, and ended up joining the prime brokerage desk at Bank of America, which was at the time virtually non-existent, and grew into be, over the sort of 6 years that I was there, sort of the central part of Bank of America's trading floor. So I did that for 6 years, 3 years in London, 3 years in Hong Kong. So I moved out to Hong Kong in 2018 to essentially run our Asia team. I decided to resign, bonus day 2021, to start a company in the space that was the gender investment gap. I didn't know what the company would look like. I had never started a company, obviously a company before, but I knew that I really cared about this problem. And that problem was a personal problem that I saw of many of my very driven, very capable, very ambitious, high-earning female friends not even thinking about investing, whereas I and my male friends were investing, during university lectures or, just into our first job. So I left and I sort of came up with the theory of what we would do, and I put together a deck, and I went out to go and raise an angel round on my own. And long story short, raised that angel round, so we raised $500,000. I sort of brought in a co-founder. We hired an amazing founding team. We built the product extremely quickly. We got ready to submit to the regulators. I went out to raise last quarter, and it was not a successful raise. And we managed to raise quite a bit from angels, but I decided personally that I didn't think that it was right taking the company forward. And so I decided to give all my money back to my angel investors. And I have very luckily joined somebody that's very impressive to be on the founding team of his company and learn a lot. So I'm now in a different space, learning a lot, but still incredibly passionate about the problem that I was setting out to solve myself, which was the gender investment gap.
Thank you, Minnie. And Emma?
Hi, so I am a chartered financial planner, also known as a financial advisor. So my job involves helping people grow their money, making great financial decisions, and to achieve their financial goals. So I started working in the industry 8 years ago. I started as an administrator and then worked my way up, began to support financial advisors, preparing work and recommendations for them. And I'm now advising myself, and now I have my own team.
Sounds fantastic. Thank you, Emma. And sorry, can I ask you all why you think it's important for women to take control of their financial well-being? Emma, should we start with you since you've just finished?
Yeah, of course. I think for everyone, it's really important to have financial well-being, but really, really important for women just to be financially literate and independent on this, because it means that it gives you more opportunities and means that you're not going to potentially miss out on those opportunities, for example, compared to men. And I think when we think about money, what we immediately think are spreadsheets and numbers, but actually, aside from the numbers, money is emotional. It makes us feel things. So if we're in a good place with our money, we can feel confident and happy and in control. On the flip side of that, if we're not feeling so good with our money, we can feel stressed and worried and anxious. And all of these feelings have a huge impact on our mental health. So it's really important to kind of increase your knowledge, take control of your finances, and improve your financial well-being.
Thank you, Emma. That's perfect. Thank you. Alexia, should we continue next?
Yeah, I think money is such a taboo in today's society. And the way I look at it is also, we all graduate at 18 and we're all given a beautiful car and no one has a driver's license. That's basically what we do with money. Everyone receives it, hopefully, when they turn into adults and have careers, and no one knows what to do with it. The reality is that women in today's society are still so far from being equal to men, especially when it comes to finances. There's the gender wage gap, there's the gender pensions gap, there's the gender investment gap, there's the fact that women take more career breaks than men. It's just in every area, we can see that women are severely disadvantaged. So the best thing we can do to put ourselves in a strong position is really try to take control of our money and learn as much as we can. And the system is broken, but at least work it as much as you can. It's more so important for people of color, even so, than women, because the gaps are even bigger on that front. So it's just, if you can't fix the system, the only thing you can do is try to put yourself in the best position you can within that system.
Thank you. Minnie, can you please talk us through?
I mean, I feel like these guys have answered it bang on, to be honest with you, and I didn't want to add more words to it when it's been said so well. But yeah, for me, it's all about kind of that confidence element, completely, and not being reliant on anybody else. And sadly, in our society, women financially have, for generations before us, been very reliant on the man to manage the family finances, and that's not what it should be about, especially when women are, the gender pay gap exists, but it is closing. And if you look at kind of the projections that a lot of the big consulting firms sort of, put forward, the biggest transfer of wealth that we're seeing in the world today is coming to women. And so when we have all this money, we need to ensure that we are, doing stuff with it, independent, like being independent with it. And so that's kind of, my view.
Sorry, I've got all this noise in the background. I was going to say Alexia's analogy of being given a car and not having a driver's license really resonates with me, because I remember going off to uni, getting a huge, what seemed like a huge overdraft at the time. Careers fairs, like everyone was giving me credit cards. So I ended up with, like 2 credit cards, huge overdraft, which I felt like free money. And then, I left like uni 4 years later with lots of debts and had to figure out how to pay all that back, which is when I started thinking about my sort of finances for the first time. I do think it's amazing that young women and students nowadays are looking at it earlier, because it's not free money, and these companies are sort of aware that we're going to feel like it's that way, because we've never talked about money. I hadn't discussed money with my parents. I didn't know what to look out for. I didn't know it wasn't free money, and that these great sort of things to have, like a credit card or an overdraft, just to be for emergencies, not to just spend. So I think it's great that we're having these conversations. I wish I'd had this conversation a lot earlier. So the next question, I'm going to ask Alexia this question. Research shows that women, you talked about this a bit earlier, lose out on over £1 million in their lifetimes through a combination of the gender investment gap, gender pay gap, and the gender retirement gap. What are the ways in which young women can take control of their finances and begin to grow their wealth, bearing in mind that most young people don't have a huge amount of money to invest?
A big question. I feel like I could go on there for 10 minutes. I think we need to make a difference between the inequalities that exist because of the system that we're in, and the ones that exist because of the behaviors that we have taken on. And there's not much we can do to fix the system, but we can definitely try and reframe the way in which we perceive money and sort of take control of our behaviors. I think when it comes to finance, a lot of us are on autopilot. You are taught a lot of things from your parents, and money beliefs are set by the age of 7, they found in a study. So you really absorb the way in which parents look at money and kind of replicate it. If your parents used to say in your home things like, oh, you know, we're not going to become rich, or this is too expensive, or, you know, money is evil, then this is something that you internalize and believe. And specifically for women, what we are fed in terms of messaging from the media and from society all the time is that we are spenders and men are earners. There is a study that was done by Starling that's really interesting, where they looked at the language in in finance articles. And they found that the ones that were targeting men, over 70% of the articles mentioned things like investing, crypto, building wealth, beating the market. It's always this idea of like growing whatever you give them. And then they looked at financial articles that target women, and they found that over 90% of them were around the topics of saving, getting that dress or whatever for less, budgeting, and really this idea of scarcity and reducing whatever you're spending. So the number one thing you can do, and I think it's already said in that question, is really this idea of taking control of the narrative. Money is a tool that you are going to have in your life. And the best thing you can do is really try to unlearn everything that you've been given by society and figure out what is the way to put yourself in the best position. And I think in the next question that you're going to ask me, I can go into the sort of how, but I really want people to spend enough time on the mindset piece. Because it's kind of like a crash diet. If you go into dieting just assuming that you're going to have control over your money, it's not going to hold. There is so many limiting beliefs and internalized messages that we have that we need to tackle before we can change our behavior in the long term.
Thank you, Alexia. That was a great response to, like you said, a big question. So thank you for that. Does anybody else want to jump in on this, or should we move on to the next question?
I think we move on, and that, yeah, unless Emma has anything to say.
No, great answer to a great question.
Cool, thank you. What things should we consider before investing? I'm going to start with you on this one, Emma.
So I think when it comes to investing, that's the sexy subject when it comes to personal finances. So before kind of looking to invest your hard-earned money, it's really important that you kind of make sure you've gone through the fundamentals and you've got the foundations in place to be able to start investing. So things like building up a pot of cash that you can use in an emergency. So that's kind of fundamental to a good financial plan. So having some cash that you could use, for example, if your car broke or you maybe lost your job. And so it means that you can focus on the crisis itself rather than having to raise money. It means that you don't have to take out debt in a time of need. And so that's kind of the foundation to make sure you've got that cash first. And then also look at things like debt. So I'm not talking about student debt, but for example, debt that you might be paying a high amount of interest on. So if you're paying a high amount of interest on that debt, if you were to invest that money rather than paying off the debt, you would have to almost get a return that's above the interest that you were paying to actually make it better than paying off the debt. So it always makes sense to look at overpaying or repaying those high interest debts. And then once that's done, obviously you've got your emergency fund and then can look to invest your money into, for example, the stock market.
Thank you very much, Emma. Alexia, would you like to add anything to that?
There's maybe 2 more points that I would add to the incredible answer that Emma has already given us. The first one is having like a really good oversight over the way in which you spend. I think very often we can get excited about the future and we're like, okay, I want to start investing. But number one thing is looking at your past and how is it that you're spending your money. What I recommend here is really printing out 3 months of bank statements and do it in paper. Now is not the time to save the environment. Take some highlighters, go through it and just highlight everything you're doing. Try and categorize it into what we call needs, wants, and future me. Needs, absolutely essential living expenses. You can't get rid of them. Wants is like the fun, the travel, the holidays, the eating out, etc. And future me, and this is where you're going to be investing from, is the bucket of money that you can allocate towards building your wealth or getting out of debt or buying a property. There's a framework that's called 50-30-20, but in London it's really hard to stick to. It's this idea that 50% of your income should go to needs, 30% to wants and 20% to future me. Take this with a pinch of salt. In London and with the cost of living crisis, it's almost impossible to achieve. And then the last element is, if you're employed, make sure you max out your employee pension contributions as well. Because oftentimes if you contribute more, your employer will contribute more as well. And that is a very, so make sure you take advantage of that.
Perfect. Thank you very much, Alexia. That was a great answer too. So between the two of you, I think you've got some really good information there, girls. Next, can we ask, what do you think is the key to being a successful investor? Emma?
I would say focus on the things that you can control. So once you do invest your money, it is going to go up and down. And if we're watching the news, we always feel as though the world is going to end. But if that were the case, then we'd probably be worrying about more than what our investments are doing. So when I say focus on what you can control, almost manage your emotions, because sometimes doing nothing is doing something. So we know that investments are going to go up and down. So sometimes doing nothing, kind of not looking at them, not reacting when they are down, is the best thing to do. Because when we invest into the stock market, it always recovers. It's just about being patient through those rocky times. And other points on focus what you control is try and keep costs low, because again, that's in your control. So the lower the cost, the more return is going to be in your pocket. And again, focus on what you can control. So when it comes to investing, don't put all of your eggs into one basket. We want to spread our money across lots of different companies, countries, sectors, which massively reduces the risk when it comes to investing.
Thank you very much, Emma. Alexia, would you like to add on this?
I jumped out for a second because of the internet, and I think the question you asked is, what is the key to being a successful investor, right?
Investor, yes.
Okay, fantastic. I think super, like, there's not much to add. What I would just say is investing shouldn't be exciting, it should be boring. And I think there's this huge misconception that investing is a trading floor and you're selling and you're buying and it's super adrenaline fueled. And being an investor like you and I is really one of the most boring activities, and it should be boring, because oftentimes what you do is investing in a really well diversified fund and just topping up regularly without doing much with it over 20 or 30 years. So it's not the sort of Wolf of Wall Street activity, or at least that's what is suggested for retail investors.
Thank you. Minnie?
Yeah, I think, you know, the points have been covered. I think diversification is the biggest thing. I think that, you know, diversification anywhere at any time is the biggest thing. You can even think about everything that happened. I don't know if people have been watching the news with Silicon Valley Bank, but I think, you know, for example, that's just diversifying your bank account, right? People need to be putting their money in different places. I think that, you know, one of the things I think about a lot is about, you know, what are your goals when you're investing and what is your age? And aligning your investment strategy with your age. And that means that ultimately, the older that you get, the more you should be putting your money into less risky assets, and less risky assets typically skew towards bonds. And so when you're young and you've got a long way ahead of you, you can afford to take a lot of risk, and that risk should come down over time. And so ultimately, you know, my portfolio is 100%. Don't copy me. This is what I'm just saying. That, sorry, I shouldn't probably talk about my portfolio, but I take the view that I should be going heavily equities. And also, you know, I think, you know, yes, it's boring. Like, investing should be boring because you should be putting it in diversified ETFs and sitting on it. But if you want to learn, you can have fun with it as well, and you can invest in the stuff that you're interested in, and you can say, look, I'm going to put 90% of my money, and this is a huge luxury to be able to do this, but say I'm going to put 90% of my money into some boring, you know, ETFs, which is the right thing to do. They're incredibly low cost. They're with Vanguard, but I'm actually going to put 10% in, you know, an ETF that is focused on gender equality because I actually really, really care about that. Or I'm going to decide to buy 5 stocks on the stock market and I'm going to put a bid in that. You know, there's something that you can do if you want to learn to make it interesting, but ultimately the bulk of it should be boring, safe, cheap ETFs aligned to your goals and your age.
Minnie, can I ask you to please explain to us briefly what equities are and ETFs are? Sorry. Just
no,
mainly for me, our audience might know, but
that's very stupid of me.
Thank you.
I was thinking when we were speaking about debt and interest before, I was like thinking to myself, I wonder if they're actually, we should explain these things. And then I'm there thinking about ETF and equities. So equities is you're essentially, these are stocks and shares. Stocks and shares are exactly the same thing. You are buying a portion of a public company. So you essentially have private companies like the companies that Alexia and I founded. And over time, as they become really big, they basically do something called an IPO, so an initial public offering. And that means that they go public. So anybody in the world can get access to these portions of the company that they can then buy. And they are then trading on a stock exchange. And then that's when you think of Wolf of Wall Street, what they're doing is they're trading these shares in companies. So you're owning a portion of that company, and that is what an equity is called. These are typically more risky because they go up and down than bonds are, that tend to be more stable, especially if it's a bond that's aligned with a very stable currency like US Treasury bonds. So that's what equities are. And now, buying a single stock is quite expensive to do. And you're not diversifying yourself very well because you're just buying one company. And so, for example, if you just bought Tesla, that Tesla, especially with how much Elon Musk tweets, could go up, down, up, down, up, down. And so actually, what sort of has come to the fore relatively recently, if you think about the whole grand scheme of like investment management, are these things called exchange traded funds. And exchange traded funds are essentially a collection of equities, so a collection of stocks, that instead of you having to go out to the market and buy lots of different stocks and you having to decide, okay, is this the right one for me, is this not, you can go and you can just buy one ETF. And you can say, okay, I'm going to buy the BlackRock iShares Global ETF. And that means that you are putting in £100 and you're going to buy £100 worth of lots of different equities. And so that means that you're completely diversifying your portfolio, because not only are you buying across lots of different industries, you're also buying across lots of different regions. And it's cheap to do that, very cheap. And so it's a very good way of, diversifying your portfolio in a cheap way. And that is what is called passive investing. So if you're a passive investor, you are not actively going out and choosing what stocks to invest in. You're going out and you're saying, I'm just going to invest in a sort of diversified selection of funds. If I was an active investor, I'd be sitting there with my Excel spreadsheet and my Bloomberg terminal and reading the news and really understanding, okay, I think this is exactly the right time to buy Tesla. And now I'm going to buy Starbucks and I'm going to sell Tesla. And that's what an active manager is doing. I can go into a lot more, but I'm going to stop there.
Right. That was a perfect explanation. Thank you so much, Minnie, for that. I think we've had such a comprehensive, well-rounded answer to that question. Thank you all for that. Can we touch on cryptocurrency? Because it's such a buzz word. And it's something I think that maybe we don't know or necessarily fully understand. What is it? What are some of the things to watch out for if you decide to go the route of crypto? Emma, can you start us off, please?
So I think when looking to invest into anything, it's really, really important to do your research and understand the facts before you're kind of putting your hard-earned money into that investment. So if we think about crypto, if I just talk from my own experience, so I have clients ask me about crypto all the time. I've had friends tell me about it. You hear about people making millions. You see it on Instagram, social media. I even saw an advert on the tube about investing in crypto. So it's really important, if we're kind of absorbing all of those different sources that are telling us to invest into crypto, that we don't use that information to then influence our decisions. So for example, if I were to kind of listen to friends or stories of people that have made millions and then use that information to then form my basis to invest my money into cryptocurrency, it wouldn't be a rational thing to do, because obviously without doing research, you don't really know what it is you're investing in. So I'd say it's really important just to kind of drown out all of that noise, which is going to come from lots of different sources, and just make sure that you are researching things before you invest into your money, invest into whatever. So for example, if you were to research cryptocurrency, you would find out that it's really, really volatile. It's not regulated. So for example, you're not protected or compensated if things go wrong. And because it's not regulated, there are a lot of scams when it comes to cryptocurrency. I'm sure many people have seen it in the news. So I would just say, before looking to invest into anything, make sure that you are getting your research from a reputable source rather than your friends down the pub.
Thank you, Emma. Would either Minnie or Alexia want to comment on this at all? Yeah, do if you don't want to.
I can quickly go. I actually now work in crypto, which is something that I never thought that I would say. But I think it's fascinating. And I didn't used to think that probably. But I think the product that we're building is fascinating. But I think it's fascinating because of the use case of what we can do. And I think that's what it's about. I think it's more about, are you buying this because you think this is going to be a quick way to make money? Then stay away. Because if it was like that, everybody would do it, and it's too good to be true. And I think it's quite similar to how I think about stocks as well. That ultimately, if you're buying some sort of like random equities, a random stock in a company that you don't really know, and it trades on a random exchange, and it's very volatile, and the company's management is maybe a bit bad, then your risk is high, right? And something's probably going to happen. But if you're buying something that is a stable stock, it's Nike. It's been, it's public company. It's a big liquid investment. It trades in a reputable exchange. Then actually, fine, give it a go, in my opinion. But ultimately, my view still with crypto, if you're thinking about it as an investment, and that's different if you're thinking about it as a use case, then it should not make up a big portion of your investment at all. And when I say not make up a big portion of your investment at all, you should get your base right, get into ETFs, diversify your portfolio, sit in that for a bit, see how it works, and then think, okay, maybe now is my time to put maybe 10% of my money in crypto, or 5%, or whatever it might be. But it should never be the bulk of your investment strategy at this point in time, because for all the reasons that Emma mentioned.
Thank you, Minnie, that was great. Can I just really take this opportunity to remind our audience that if you've got any questions, we'll try and deal with them at the end, but maybe just send them through, and then we can either incorporate them into what the discussion as it goes on, or at least we have a bank of questions to call on at the end. This is not one of the questions. Sorry, Alexia, please.
I was just going to say one last thing about crypto. The whole idea with crypto is that it's decentralized, meaning that there's no regulatory body. So that means you are the owner of everything you do, which means you're also the owner of your account. And don't make the same mistake that I did, which is purchasing Ethereum in 2017 and losing the password, because no one's there to save you. That is probably the worst mistake I've done in my entire life. And I have tried everything to get that password back. I've looked into every diary. I've tried to go into sleep hypnosis. It is not coming back to me. So there's a lot of money that is sitting somewhere and I cannot access it. So just make sure that you don't make that mistake. You are your own boss when it comes to crypto. So no one's going to be there to save you if you mess up.
Thank you very much, Alexia. Sorry, it's not one of the questions we talked about, but going to something Emma mentioned a lot, which is research. Can you please all give us, just generally about money, about investing, about crypto, whatever it is you wanted? Do you have any sources, like research sources, that you can recommend, or how does one go about doing their research?
I would start with, sounds a bit sketchy, but start with Google and actually kind of build up a picture. So I wouldn't use just one source of information. So for example, I wrote an article for the Evening Standard on cryptocurrency. So I kind of did a few searches and I found out so much information in a few minutes. Even for example, so the Financial Conduct Authority. So they are kind of like a government body that regulate or regulated investment. So I'm authorised by them to give advice. And when I looked on their website, it kind of says, do not invest in cryptocurrency unless you're prepared to lose all your money. And like all of these things, obviously they're a government body. And I think just making sure that you kind of do research from multiple sources will really give you an insight into what you're looking to invest in. And as well as that, when it comes to like ETFs, for example, or another word is a fund, so it's a collection of different investments, they'll often have a fact sheet which tells you kind of what it's investing in, what the goal is, or kind of whereabouts your money is being put into, so which countries, companies, sectors. So kind of that kind of research is really, really helpful before making those big decisions.
Thank you, Emma. Minnie, do you have
Yeah,
any
I'm
sort
going
of
to say,
sources?
download Juno. That's the first thing you've got to do.
Be elected to that.
I was going to say it because I feel like I have to say it for her. There's apps available that you can download. So that would be the number one place to go to. Little plug there, but it's true. You know, it's easy. It's on your phone. You can do it when you're on the tube. Like that's a great thing to do. I love YouTube. Like I am all about YouTube. I go on YouTube the whole time. And I think that there are some really good explanations on there. If you just go to the clear staple ones and you can see that it's from it's been watched by a lot of people and you can see that it's from, you know, a reputable person, not some sort of random person in their room and, you know, wherever. I also think that some of the big websites, so the big sort of the BlackRocks of the world, the Fidelities of the world, they have fantastic education sections on their websites. All the resources are out there. And it's just about, you know, taking that time and spending that time to do it, because it's very easy to say, I'm going to do it, and not getting around to doing it. And I think that's more the hurdle in people's minds as opposed to actually, you know, when they sit down, the understanding of it, in my view. So yeah, but I think, you know, there's also places like Finimize, which, you know, people really like. Yeah, that's not particularly helpful, I don't think, an answer. But, you know, it's like anything. It's like, you know, what clothes do I buy? Well, you know, you've got to like, you know, just look around really and just get to know. So yeah.
But you're right, there is no shortage of sources and there's no excuse really to not do your research, because it's not like back in the day when you did an encyclopedia or, I don't know, physical fact sheets. So there is no excuse really. There's lots of research.
And you know, the range is huge, right? You know, I used to get my sources from research analysts that sat on the floor above me at Bank of America. You know, the average person that's investing for the first time does not need to know what is going on like a wind farm in Denmark about how their stock's doing and if I should invest or not. You know, that's just like another level. So it's like, you know, but you know, there's a lot of information for anybody that's at any stage in the spectrum of their investment journey, and particularly those that are right at the start, because you know, the government wants people to invest. That's their huge thing. Not many people in the UK invest at the moment. It's actually shockingly small versus America.
I would just say the type of information that you're looking for, I would classify into two different categories. Number one is like learning how to invest. And here you're not looking at information on specific companies and how they're performing. You're just trying to learn how to invest. This is a place where Juno is perfect for that. Once you've achieved this, you can move on to platforms like Finimize and finding out information on the news on how companies are performing, etc. And that's more around like keeping yourself in the loop of what's happening in the market. But it really is like a two-step process.
That's perfect. Thank you very much. Thank you all of you. That was a great answer to the question. We're going to continue with our questions. Again, if you've got any sort of reviewing questions that you want to pose to either any of our speakers or just generally, please do put them in the chat or in the question box. Okay, so research has shown that it's important to women to invest in companies that align with their values. So, for example, have a positive impact on the world, or, you know, is trying to address gender diversity in some way, or, you know, solve world food hunger, or just something that is personal to you. How do you go about doing this? How do you invest in a company that is that can align with your values?
Should I go
Right.
quickly, just because we are building that at Alpha? So research shows that women are more likely to want to do that. Not that they should do that, but they are just more likely to want to. Women tend to be much more goals-based about how they want to have an impact in the world and what their personal life goals are. Men tend to be much more goals-based financially. So I did a lot of research about that with Alpha, how we were building our product. And what it showed to us is that men tend to think, okay, I want to hit that point in my career and hit that financial goal. I want to hit that bonus, I want to hit that pay rise. Women tend to think much more about like, I want to leave my career at that point in time. I want to move up in my career at that point in time. I want to have a child at that age. I want to get married at that point in time. That's certainly how I think. And I think how many more women tend to think. And it's just the way that our behaviors are. But you know, we're not robots, and you can be, you know, hugely financially driven if you're a woman and fantastic if you are. So, you know, there's no right or wrong. Many thematic ETFs exist now. It was a huge kind of proliferation that happened in the past sort of few years. And so basically every big investment, you know, company, asset manager, I should say, whether it's BlackRock, whether it's Fidelity, whether it's Vanguard are less good, offer these sort of thematic ETFs. And so you can essentially just go to these places, choose the theme that you're interested in, whether it's gender equality, whether it's healthcare innovation, whether it's clean energy, whether it's, you know, some really niche ones like education, and choose what you care about. I think that the thing that you've got to understand though, when you are doing a thematic ETF, is that inherently it is slightly more risky because it is slightly more concentrated than if you were going and buying, for example, MSCI World Global, where you've got a huge diversification of sectors and industries and stocks. So it's just one thing to know, but you know, the way that ETFs are structured, no ETF really is you know, hugely, you know, risky. And I don't even like using that word because it's stupid, but you know, hugely sort of volatile is what I should say.
On the note of ETFs that Minnie just mentioned, there really is an ETF for absolutely everything. Just anecdotally, we're looking at some funny ETFs for a quiz inside the Juno app, and we found that there's an ETF that benefits from global warming. So if the rising sea levels do happen, that ETF will do well. And there's ETFs that benefit from obesity rates going up in the US. So like any type of company that like, it's so messed up, that benefits from Americans becoming more and more obese, and the ETF goes up. So yeah, you'll find anything you want. Please don't invest in those ones. But you'll find everything.
That one's basically like McDonald's, Starbucks, like, yeah. Oh, God,
anything
so
diabetes related, stuff like that.
Oh, no. That's sad. It makes me sad that people make money off, but I guess it's like every bet, there's always someone to win. Emma, did you have anything to add to that question?
Just really kind of echoing what the other ladies have said, really. So I think ethical investing has become so much more popular these days. So as Minnie said, back in the day, you used to have to compromise, maybe have a bit more risk or not as much return in order to kind of invest in an ethical way. Whereas now, because there's this huge demand for it, it's becoming really popular, and actually you don't need to compromise on returns. So I think the starting point is to just take a step back and understand what your values are and what's important to you, whether it's something really, really specific, or it's just generally you actually want to have a positive impact on the world and also obviously make your money work for you. And then in terms of actually finding somewhere to invest your money, so funds, the name of funds is normally gives you an idea as to what it invests in. So a really common one at the moment is called ESG. So it stands for environmental social governance. So what they'll do is they will look for companies that have a good environmental impact. So obviously looking at kind of climate change and things like that, social impact. So for example, do they treat their staff well? Is there equality, diversity? And then the governance is there good governance in the company? So they want to be investing into companies that the directors aren't paying huge bonuses to themselves, but actually not to the rest of their staff, and they're really transparent. So ESG is slightly different to ethical, because it's investing kind of like a step in the right direction. So for example, Shell might be in an ESG fund, because although obviously Shell is oil, it actually is investing lots of money into renewable energy. So it is kind of trying to make a positive difference. So that's why it's kind of a step in the right direction. But if you do have strong beliefs, then there are different funds that, for example, would only have a positive impact, so only invest in companies that care about the environment. Or the other side is negative, so they will just exclude every company that kind of deals with like tobacco or arms and things like that. So having a look at the name of the fund, for example, ESG, will give you an indication as to what kind of companies they invest into, and then you can read the fact sheet and it will give you more details as to how they go about that.
Thank you very much, Emma. Our next question, I'm going to come to you first, Minnie, because you mentioned the word goals a lot when you're speaking about investing. You also alluded to this when you were talking about how your goals should sort of your age and what you're investing in should align. Why is it important to have goals when investing?
Yeah, the whole way we were building Alpha was around goals, so goals-based investing. And goals-based investing is this sort of theory that's come about in the past few years. I think it helps people contextualize why they invest. You're more likely to put your money into your account on a regular basis if you know that it's working towards a goal. You're more likely to stay the path and not get distracted by, taking your money out or, doing something that you shouldn't be doing. And also, you're more likely to choose the correct investment strategy for you based on what that goal is. And just to sort of solidify, these goals should not be short term, and these goals should not be, under 6 months. If your goal is under 6 months away, that money should not be in an investment account. That should be sitting in cash, ready for you to invest, ready for you to sort of use it, sorry. But if your goal is, let me say, 1 year to 5 years to 10 years to 15 years, and people do have 15-year goals, 15-year plus goals, that's retirement, right? Or like whatever it might be, or that house in the country when you're eventually that old. That is when, goals-based investing can come to the fore. And so, so the whole way that our kind of theory was at Alpha is that, every investment that you put in was aligned to a goal.
Perfect, thank you. Emma, I see Alexia's probably not properly on at the moment. Emma, did you want to add anything to that?
Not really. I think, Minnie hit the nail on the head. I think you're just more likely to stick to it. Some people just want to invest to make money, but for most people, there's a reason behind why they're investing. So if you kind of visualize and focus on that goal, so what is it I'm trying to get out of this process? As Minnie said, you're more likely to stick to it because you know that you're working towards that goal in X many years' time.
Thank you. Alexia, would you like to add anything?
There's not much more to add to this. I think they've perfectly talked about everything. The only thing I would add is, even if you're not clear on the financial goals that you might have in the future, given inflation is so high at the moment, there is just also a cost in not doing anything and leaving your money in your bank account, because it is losing in value over time. So even if you're thinking, I don't know if I should start investing just yet because I don't really know what my goals are, and maybe it's something I'll figure out later, there is a cost to your inaction. That is also a decision that you're making. So just wanting to highlight the importance of safeguarding your savings from inflation.
Perfect, thank you. All great answers, thank you all very much. I noticed someone raised their hand. If that was on purpose rather than a mistake, can you please put your question in either the Q&A box or the chat box, and we'll deal with it that way. Okay, this will be a good question for Minnie and Alexia. What is fintech, and how has fintech changed the way that women invest and made it more accessible for first-time investors?
to get started. The word fintech is just a mix between finance and technology. So what it means is it's the entire sector which essentially makes financial services more accessible through technology, more scalable. And when it comes to the world of investing, it's really democratized completely the access to the wealth building opportunity that investing is, because investing is something that you used to need to go to a professional for. It was something that was done way back in person, whereas now you can download about 20 different apps from the App Store and anyone can start investing. It's really made a lot of financial privileges back then available to the average individual. The only problem that I see with this is that the fintech industry has been booming for the past decade, and there's so many solutions that are created, but they're created by a very specific group of people, and that's mostly white men. And unfortunately, if you look at the wider demographic and just the average individual in the UK, a lot of them don't even know how to create a budget. So being able to trade derivatives from your phone is something that is like 10 steps ahead. And there's a huge gap in between the fintech sector and what the consumer actually knows how to use. So yeah, I think it's exciting that there is progress in that world. Now it's up to us to make sure that we stay up to date and that we're able to use all of the new tools that are being made available to us.
Thank you very much, Alexia. Minnie, would you like to add anything?
Yeah, I was just going to say there's a really good book that I speak about a lot, and Alexia has heard me speak about a lot, called Invisible Woman, which basically helps, or it really goes into how our world has been designed, and how our world has been designed with women sort of as invisible. And that certainly is a thing in the fintech world, where if you look at the founders of these like companies that have, grown from being very small to very large in the fintech landscape, they have been predominantly, and like when I say predominantly, 98% founded by men, certainly on the investment platforms. And so inherently, the way that they design these products is through their eyes. They design something that they would want to use. The flow of the app is designed for them. The way that they ask people about risk is designed for them. The way that it looks is designed for them. The engineers they hire around them and the teams they hire around them are their friends, and so they're men. And then who makes the money when the company does really well? It's men. And so the cycle starts again because they have money, so they can then go and start their own business, and they hire their friends, and then they design something for them. And you're in this never-ending cycle, and this spiral of fintech is actually very small. And so, part of the thing that we were trying to solve was like, how can we design a product that is with women in mind, that puts women at the core of the whole experience? How can I build a founding team that is not men? My co-founder was a man, actually. But how can I bring my founding engineer that is going to get the founding equity in this company, and ensure that my founding designer is a woman? And so and I think that's, in my view, has been a lot of the reason that this gap is sort of proliferated in the investment world, because the founders of these companies that have been the ones that have been pushing the cusp of innovation have not been reflective of wider society.
Thank you so much.
Until now. And that will change.
Thank goodness for people like you and Alexia who you are definitely impactful in trying to change this landscape, and we're very grateful. I hope if we have this conversation in another 2 years, maybe things will be slightly different. In 10 years it should definitely be different.
Yeah, well, secretly I'm at the moment just trying to make that loads of money so that then I can just go again. And yeah, so there's strategies to get to your end goal. Mine's slightly veered off, but we'll come back.
I have no doubts. Doesn't seem like we've had many questions. I'm going to ask we'll come to the end of our session, ask our speakers our last question. And then that time, if you have, I'd love to hear, or we'd love to hear from you if you're going to make any actions off the back of this session. Can you tell us what your statement of intent from this session is in the chat box or in the Q&A box? If you just let us know what you will do off the back of this session to take control of your financial well-being, that would be great to hear. And for our speakers, thank you so much for your time. We've got one last question. Can you please give us 3 practical steps that our audience can take today get started on this journey of financial well-being. And if you have a resource that you can provide as well, I know I spoke about research earlier, so there might have to duplicate some of the things that came up then, but that would be great to hear. I will start from my top left. Alexia, can you please give us some tips?
So on the Your Juno app, we've got about 50,000 customers today, and I would say about 2,000 or 3,000 of them have done all of the content and are super users. When I interviewed them and I asked them what has been the biggest difference in you actually making a change with your finances, they always give me the same answer. They say, I have immersed myself into the world of finance. I listen to podcasts about finance. I talk about money with my friends. I do the Juno app. I read books. And you obviously don't have to do this for your entire lifetime, but going through a phase, whether that's 6 months or a year, where you truly just decide to go through financial glow up, whatever you want to call it, but give it a lot of energy and make sure that you're absorbing lots of information. That is the best source of motivation you can have. That is immerse yourself into the world of money for a little while. Number 2, build an emergency fund. We talk about this time and time again. Everyone needs to have an emergency fund, especially as women. It is the way for us to remove ourselves from situations that don't serve us anymore. If you're with a partner, he's starting to become disrespectful, you need to be able to leave. If you have a boss, he's got to wonder, you need to be able to leave. All of those things are just possible if you've got the safety funding to do that. So that is advice number 2. And then advice number 3 is, it is really a lot more simple than it is made out to be. I think because men have been ruling the world of finance, they've done a great job at gatekeeping it and making it sound incredibly fancy and complicated. Once you go into it, it's really not rocket science. So don't let yourself be intimidated by all the jargon and the men in suits that rule that world.
Thank you very much, Alexia. That's 3 great tips. Emma, can we come to you, please?
Yeah, so no great tips to follow on from, Alexia. But yeah, I think, again, some things that we've already touched on already. So practical steps in terms of, okay, get bank statements, print them out for the last 3 months and have a look and just get to grips with what's coming in and what's going out. And also just highlight the spending that you have that maybe brings you joy and other spending that perhaps, okay, maybe we like going out every now and again, but actually every single weekend, is that bringing us joy because we're feeling awful from it and we're spending a lot of money? So I think it's a really painful exercise, but once you've done it, it will make you feel so much better getting to grips. And I think that's the starting point of taking control of your finances. My second one was, again, budgeting. So using a budgeting rule. So the 50-30-20 rule, again, that's what we use just as a guideline to get started. And again, if you're saving more than that, fantastic. But if you're not, don't be hard on yourself, because with everything that's going on in the world, just getting started and having some kind of guideline will really help you. And then the final one would be, again, like it comes back to the 50-30-20 rule. So pay yourself first. So when, for example, you're paid, rather than saving that 20% at the end of the month and saying, okay, I've got my 20% left, I'll save that. Actually, it's prioritizing your future self. So as soon as you're paid or you receive some money, you then automatically set up 20% of that to go and repay your debts or to go to your savings for your emergency fund or into your investment. So it's prioritizing it. It's same importance as paying your mobile phone bill or paying your rent, paying all of the bills. Paying for your future self is also really essential. So just getting into that mindset and that routine, rather than giving yourself that opportunity to say, oh, I've got a bit of money left this week or this month, maybe I won't actually save it.
Thank you. Again, some more great tips. Thank you very much, Emma. Minnie, can we come to you now?
I don't know if I have 3, but I'll go with some. Start small, like that's the first thing, right? You just got to dip in, put in £10 and fail. Like, failure is the only way that you're going to learn, like everything. And so just put it in, see how it goes. You've learned something if it doesn't go well. Keep it simple. Like, you are not trying to do anything complex here. Simple is better in this situation. Look at Warren Buffett. He's a very famous investor in the US that started a company called Berkshire Hathaway that has just done fantastically. He has a very, very simple way of investing. And simple is key. And then enjoy it. Like, this is not meant to be something that is just like boring. If you are investing in boring ETFs, which you should, enjoy the stuff around it, like read the news, read the Financial Times, get involved in the stories around these stocks, like see who's doing an IPO, just like enjoy the experience and bring in your friends and, make it something that's fun. Make it something that's not a chore. I know friends that now, meet their friends once a month and chat about what's going on in the market, interesting things that they've seen. It doesn't need to be a boring chore, and it doesn't need to be overwhelming. And everybody will have an opinion on how you invest, on what you should invest in, on what you should be reading. Your opinion, there is no right and wrong, and your view is the right view on this. So just like, that's the only thing that's holding you back is not starting. So just go for it.
Perfect. Thank you so much, Minnie. I love how you all got very different tips, because I said, there's every chance we'll duplicate them, but you've all had very important different tips. And
but this is also the problem, right? That everybody's got tips, and that's the thing. And you could then listen to everybody and like, okay, I'm going to do this and this and this. But it's good. But like also, don't feel overwhelmed, because I think that's the biggest thing that stops people, is this feeling of like, oh my gosh, I've got to do this and this and this and this. And it's not that hard. It's literally going to a company and buying something. And but
I don't think you've all made it not at all overwhelming. And in my objective opinion, I think the best tips were all here from all the ones you might hear. Okay, this is the end of our session. I want to say huge thank you to our speakers. We couldn't do what we do again without people like you who've just spent your time sharing your knowledge and your information and your just wealth of experience with us. And we're very, very, very grateful. Thank you to everyone that's on this session. Please make sure you stay in touch with us again. Our website is www.gainuk.org. And we're also on Twitter, our investors, and on Instagram, girls are investors. Please do stay in touch with us. We've got lots of tons of, this video is going to go online. We've got tons of other resources to help support you. Very few on your personal sort of financial journey, which is why this one's so special, but generally your career, an investment career. So please do stay in touch with us and stay in touch with all of our, hopefully they don't mind, with all of our speakers. And thank you, and hopefully see you again soon. Please all come back on a panel. Thank you very much, Alexia, Emma, Minnie.
Amazing.
Bye-bye.
Thank you so much. Bye.
Bye.
Bye.